from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, U.S. stocks sliding as the tech sell-off continues amidst the threat of inflation. We're going to talk tech megacaps with Dan Ives of Wedbush. Plus, you could call it cabs for jabs. Uber and Lyft say they will give free rides through July 4th to anyone needing a COVID vaccine in the U.S. President Biden says this will help boost the country's economic recovery. And speaking of recovery, we're focusing on Boston's rebound, a hotbed of biotech innovation and companies like both Moderna and Pfizer. We're going to speak with Boston leaders, including Moderna co-founder Noubar Afeyan, Boston Mayor Kim Janey, and Celtics co-owner Steve Pagliuca. But first, to the markets, investors remaining on edge with inflation potentially looming. Let's get the latest from Bloomberg's Kriti Gupta. Kriti, walk us through the day.
Well, Emily, let's just start micro here because we do have some earnings stories, and we'll come back to the macro. Let's kick it off here with Lemonade rallying ahead of reporting earnings. That is coming at the bottom of the hour. You also have Unity Software rallying on an earnings beat, second quarter revenue beats coming in. You did immediately see a spike. This is actually up 2.2% after paring back some of those gains. So good news there for Unity Software. And lastly, you have EA. The stock did originally drop by more of a margin. Looks like it's coming back just a little bit. Those are your after hours earnings stories. But like you said, Emily, the story was really macro today. We started off at the open really seeing broad-based pain in the New York FANG index. And we have to really think how much of this reminds us back what we saw back in February when we did see tech really react to those surges in yield. And now look at this chart behind me. You can see how correlated they are, yet the correlation kind of fading as we get closer. So it really tells you how much of that are they paying attention to when it comes to trading these big tech names on a day-to-day basis, which brings me to the question, is it valuations that's spooking investors? And I really want to show you just what we've done in terms of the PE ratio for this index. You've really seen it come back since that September tech correction, and now you're starting to see it come right back to pre-pandemic levels. So it really tells you here, the folks that are saying, well, maybe those valuations are too high, maybe 2020 put those tech trading multiples at extreme levels. Well, now they're back to pre-pandemic levels. So what is really the dynamic here? Can tech rally despite those concerns? That's what we'll have to see in the coming days, Emily.
All right, we're going to ask that question right now. Kriti Gupta, thank you. Let's get into tech's small comeback after the day's sell-off. We're joined now by Dan Ives, Managing Director at Wedbush Securities. So can tech rally? Dan, what do you think?
I believe it can. I think second half of the year, tech's up 15%. And my view is, even though right now inflation fears and multiple fears, and I think ultimately, many saying it's as good as it gets, I think you're going to start to see numbers second half that meaningfully blow away street numbers. I think the digital transformation story is FANG, cloud, cybersecurity. I think that's what's really going to lead us higher. And also M&A, I think, is going to also be a factor that's going to play into this move higher for tech.
But what if inflation does start to loom and it becomes a reality? What does that mean for mega cap tech?
I think right now for the bulls, it's fighting a ghost, because as we've talked about with these blowout tech earnings, good news was bad news, and ultimately bad news is worse news, and you're just seeing a lot of these multiples compress. If you talk about inflation that starts to come in, of course multiples will start to compress, but I believe that's already starting to get factored in. If I look at a lot of these names, the valuations, and a lot of my conversations over the last few weeks, we're starting to see more investors that were skeptical on valuations now do the homework, look for which of the winners to own. I think we're getting close to what I would view as oversold on tech.
So any specific names that you would call out that you think are getting unfair play?
Well, I think first in cloud, Microsoft, that's the large cap name I circle. I think that's a $300 stock, and that continues to really check every box. Cybersecurity, I look at names like Zscaler, names like Tenable, names like SailPoint that have been oversold in a secular trend, just like we're seeing with the pipeline hack, that's not going away. And then on large cap, I view Apple on a FANG perspective. That's the one that I think many are viewing that the best is in the rearview mirror. And I think that's ultimately, as this proves out, the super cycle thesis in services, I think there's a stock that's 40, 50% higher in the next 12 to 18 months.
Meantime, I want to turn to Elon Musk and Dogecoin. Of course, on the back of that SNL appearance, we saw Doge take a hit. We saw Elon Musk refer to Doge as a hustle, and it's unclear whether he was serious or joking. Then today, a tweet from Musk asking if Tesla should accept Dogecoin. That boosted the cryptocurrency. What's your take on this?
Yeah, I mean, especially after the Saturday Night Live and the sell-off that we saw there, I think what this shows is that Musk is serious. I mean, really doubling down on crypto, of course, taking Bitcoin in terms of from a transaction perspective, obviously a boost for Dogecoin. And I think with this, just take a step back, it just shows that the crypto from a transaction perspective is really something that Tesla's going to double down on at a time that right now it's a glass half empty view of the stock in light of everything we're seeing with risk off and EV names thrown in there.
But as someone who covers Tesla, is that something you like? Do you think Tesla should be accepting Dogecoin, which so many people look at as a joke, quote unquote, currency?
Yeah, I view it as a distraction. And I think right now at a time where they're clearly going through some speed bumps in China, EV stocks are selling off. Investors that are focused on Tesla, they kind of view this as a sideshow. And I think that's something that it's a balancing act for Musk, where a little the blooms come off the rose. And I think right now investors' patience is wearing a bit thin because they just want to focus on execution. Remember, this comes on the same day that China numbers came out, pretty soft for Tesla. So I think I think this is definitely going to be a trying time, but ultimately we believe they come at this just because of this green tidal wave and demand that we're seeing across the board.
So what's your outlook for Tesla in China coming out of a pandemic, knowing that more people might want to commute in a car and not take public transportation, but also that it's a more aspirational kind of car for a Chinese consumer?
Yeah, look, right now, I mean, we're seeing that green tidal wave really in China. I mean, China's kind of front and center in terms of the whole EV thesis globally and for Tesla as well. I mean, we think that's 40% of units going into next year. Well, competition's increasing. You look at NIO, XPeng, and others, but the biggest issue right now is just black eye from a PR perspective from safety issues and making sure Musk is able to navigate the political issues in Beijing, very similar to what Apple's been able to do, because if there are speed bumps, that would derail a big part of the bull thesis. We continue to keep our thesis in terms of China, but no doubt, I mean, these coming months are key for Musk to play nice in the sandbox with Beijing.
All right, Dan Ives of Wedbush Securities, thanks so much for joining us. Always good to have you on the show. Lots to watch. Now to a future market participant in what could be one of the biggest SPACs ever. Ginkgo Bioworks plans to go public in a $17.5 billion merger with blank check firm Soaring Eagle Acquisition, backed by former Hollywood exec Harry Sloan. Earlier, I spoke to CEO Jason Kelly about the news.
If you think about an IPO process, it sort of takes your executive team out of the game for about 6 months. And here we worked with the folks at Soaring Eagle. They've been doing SPACs for nearly a decade. They're very operationally excellent at it. We got a pipe done in 2 weeks. With great new investors: Morgan Stanley, Putnam, ARK, Bailey Gifford coming in. So I could get back to building the business fast with this, and we had good surety around the amount of funds we'd be bringing in through the pipes.
Ginkgo Bioworks CEO Jason Kelly there talking about choosing a SPAC over an IPO. We're going to hear more from him later this hour. One of the many biotech darlings coming out of the Boston region. Do not miss our special conversation with him, Moderna co-founder and chair Nubar Afeyan, and more coming up in about 30 minutes. Also up next, some Americans' reluctance to get vaccinated threatens to hinder the nation's recovery from the pandemic. As a result, we're seeing more incentives to get shots in arms. Details next. This is Bloomberg. Ginkgo again. All right, we just told you about Ginkgo Bioworks preparing to go public via SPAC in one of the biggest SPACs potentially ever, with Soaring Eagle acquisition backed by former Hollywood exec Harry Sloan. You're going to hear more of my interview with Ginkgo Bioworks CEO Jason Kelly later this hour. Meantime, I want to turn to vaccines. The U.S. has given out about 263 million doses of the COVID vaccine, but still only about 60% of American adults have gotten at least one shot so far. As a result, Uber and Lyft say they will offer free rides to vaccine sites through July 4th. Here with more, our Bloomberg senior editor, Jody Snyder. So, Jody, obviously the White House is pushing vaccines by offering these incentives, but my question is, are these incentives actually working? I've been driving past some of these vaccine sites and seeing them looking like they're empty.
Yeah, that's a good question, Emily. Do they work? Do people actually say, oh, now that I can get a free ride to a site, I'm going to take it? I think we're going to have to see the incentives, whether these incentives work. But the question for the Biden administration right now is, how do you get this next group of people to the sites to get those vaccines? They've already got the committed people, the people who really want them, either had their shots or have already signed up. So now this next group is really critical for them, that the people who, well, you know, they're not necessarily against it, but you got to make it easy for them. You have to make it convenient. And so that's the idea behind the free rides. That's the idea. In some states, they're offering incentives. West Virginia, for instance, is looking at giving savings bonds to people 16 through 35, $100 savings bonds if you get a shot. Again, not so sure it'll work, but the administration is trying to get to those people.
So let's talk about vaccine hesitancy and just how bad it is. 60% of American adults. Do you think we'll hit Biden's goal by getting to 70% by July 4th or no?
Well, we may, because tomorrow we're going to have that panel that's going to decide whether 12 to 15-year-olds are going to be able to get shots. And if they're able to, that certainly raises the number up of people. But the question really is now, you know, not only getting them there, but making it clear to people that we still have a problem in terms of the coronavirus. For instance, even though we're seeing fewer people get the shots, we're down to about 2.1 million shots a day. 3.4 million was where we were a month ago. We're also way down in cases. So 60,000 cases a month ago per day in April. Now we saw 22,000 cases on Sunday, which is the lowest number since June of 2020. So, and hospitalizations and deaths are also down. So it's convincing people that, hey, this is still out there. You need to get vaccinated. We're not going to get rid of this until we hit those higher numbers, those higher, what now is being referred to as pockets of immunity. And that's going to be a tough sell.
Right. Speaking of hesitancy, if adults are hesitant, they're going to be really hesitant about vaccinating their kids, and we may not even get a vaccine for kids until the fall. And your team has a new piece out about doctors watching these variants in the U.S. warily and seeing cases among kids, severe cases rising. Tell us what they're seeing.
Yeah, we are seeing that. This is sort of a new and very sad development that children, it was really thought until very recently that children, if they got the virus, really usually had a mild case, often were asymptomatic, the concern there among them was about being carriers. Now we are seeing, particularly in places where the variants have spread, children and middle schoolers, young teens get very serious cases of COVID-19. And this is a real worry. That's a push on, that's part of the argument that's being made to get this out to those 12 to 15-year-olds as the FDA's approved, and we'll see the CDC panel deciding tomorrow. But then the question is those younger kids. And it's also a problem for parents, right? If you have an unvaccinated child, there may be some reluctance on parents to get back to the office.
It's terrifying all around. Our Bloomberg senior editor, Jody Snyder, thanks so much for bringing us up to date. I want to turn now to social media. TikTok is testing in-app sales in Europe. This in a move that will intensify competition with Facebook, which of course is also pushing into social commerce. For more, I want to bring in Bloomberg's Kurt Wagner, who covers social media for us. Kurt, tell us how TikTok plans will work.
Well, imagine you're scrolling through TikTok, you're watching a video, maybe from a brand or an advertiser, and you see a product in the video, and there's going to be a little tag right there on the video that lists the product. You click it, and voila, you're into either the retailer's website, or I would imagine eventually you're going to be buying these things directly within TikTok. We already see something similar with Instagram. And so there's this idea that, if you're enjoying a video and there's products in that video that look cool or that you might be interested in, how can they make it as simple as possible just to tap and purchase? And I think that is the real process here, is they want you to go from inspiration to buying in as few clicks as possible.
Now, do you think that this will work here this time? Social commerce really hasn't worked that well on Facebook, on Instagram, even on Pinterest, and places where it seems like it would be pretty straightforward.
Yeah, I'm pretty hesitant to say that it will work because of what you just pointed out. Like, we have been seeing Facebook for years talk about this idea of buy buttons or product in-feed purchasing. And I really don't know how often it happens. I mean, obviously it happens with ads, of course, right? But I think this idea that you would get spontaneously purchase something directly from a Facebook video has not really worked in the way that I think the company certainly thought. You may remember buy buttons. Those were even on Twitter. This idea that, hey, you're just going to come across a tweet and feel inspired to spend money right then and there. I think what we'll probably see is similar to how ads work. You're going to see something you like, maybe you'll save it, bookmark it, whatever, and you may come back a week or even a month later and buy it. But I'm a little skeptical that people are going to go exactly from discovering something for the first time to purchasing it right in that moment. But this has worked in other Asian countries, especially where TikTok's parent company operates in China. And so there is reason for why they would want to do this.
Interesting. Perhaps the next frontier of big tech battles and competition. Our Kurt Wagner, thanks so much. Appreciate your opinion there. Meantime, coming up, Palantir shares snapping a 10-day slump after reporting strong revenue growth, saying it might add Bitcoin to the balance sheet. We're going to hear from a shareholder, Eric Munson of Audit Ventures, coming up next. This is Bloomberg. The data analytics company Palantir beating Wall Street revenue estimates and forecasting sales growth of 43% in the second quarter. The company also announcing its embrace of a newer form of cryptocurrency, Bitcoin. Here now with more insight, Eric Munson, co-founder and CIO at Audit Ventures and Palantir shareholder since 2014. So Eric, you've been a big supporter of the company. What do you make of the Bitcoin acceptance? Is that something you're happy about?
I think it's just them adopting the latest trend. If people want to pay them in Bitcoin, I think that's fine. I don't think it's a material change. I'm more excited about the growth rate and the acceleration in the number of new customers, the improving margins, and the increased outlook and visibility for positive cash flow and profitability in the company in the years ahead. Added Ventures is proud to be a Palantir shareholder.
When it comes to growth, what are you particularly optimistic about? Obviously, the world is reopening and many of Palantir's customers have gone through a massive acceleration in tech adoption, including their adoption of Palantir technologies.
Exactly. And the supply chain management process, the tracking of medical equipment, tracking of vaccinations and people are all playing to Palantir's strength. So we see continued growth. Commercial revenues up over 70%, government revenues up over 83% year over year, customer growth of 20%. When one of the people were concerned about the number of customers, I think with the IBM channel marketing and the things we're seeing going forward, I think there's going to be a lot of customers for Palantir. And the fact that their margins are improving, they've got $340 million in the first quarter, $360 for the second quarter. Understand that the 98% recurring revenue means they're going to start the third quarter running at a $360 million plus revenue rate. Company's on track to do $1.5 billion to $1.7 billion in revenues this year, potentially. Very exciting for investors like us.
Well, $1 billion certainly talks. You have stuck with this company through ups and downs and a lot of controversy. Do you think the skepticism around Palantir will eventually wane? And does that concern you as a risk going forward, especially as it comes to their work with governments around the world?
Well, Emily, I think people have always been skeptical of Palantir, and I've had so many people tell me they would never go public, they'd never get to $1 billion in revenues. And the company has delivered consistently. And today we're seeing a stock up 10% in a market down 1%. I think that tells the story. $2.5 billion of cash on the balance sheet, growing at 70%, on its way to putting up growth like this for the next 5 to 10 years. In our opinion, they can grow consistently at 30 to 40% in our belief going forward. Data analytics is in the very early stages and part of that ecosystem and will be for the decade ahead.
Does the tech sell-off concern you, especially more broadly?
Absolutely. I think there's a lot of room for a correction. We've not seen a 10% correction in quite some time. We've gotten down 4 or 5, 6% a couple of times. And so, look, we've had a terrific run. It's the longest rally we've seen in the history of the markets. It's only natural to have some backing and filling and some corrections. Palantir's corrected from the highs after Thanksgiving of $45 a share to less than half of that. And we think the company's a great value under $20. We also own Airbnb, and I'd love to talk to you about Airbnb after they announce earnings. We have a plethora of other companies in the portfolio like Robinhood and Klarna and amazing companies in the fintech space. SoFi we bought last year, and that's going to be that merger was effective. And we have all kinds of wonderful trends in the economy. There's going to be volatility in this market. There's been a lot of uncertainty. We've had a great rally, and we've seen some corrections, and I wouldn't be surprised to see the tech correction continue for a period of time. But fundamentally, ability and good revenue growth, and
Eric,
will be very helpful.
Eric, we're losing you, so I'm going to let you go, but I got your point. We'll have to have you back to talk about some of these other companies. Eric Munson, co-founder and CIO of Audit Ventures. Coming up in the next half hour, we're going to talk to some of the biggest names out of the greater Boston area about the region's economic recovery. That, plus the explosive pace of biotech innovation, all happening there. Coming up next on a special Bloomberg Technology. This is Bloomberg. Welcome to a special edition of Bloomberg Technology, Boston. While Silicon Valley gets most of the attention for tech innovation, for more than half a century, another innovation hotbed has been sprouting on the opposite coast. The greater Boston area is now home to the highest concentration of the most powerful biotech and life sciences companies in the world, including Pfizer and Moderna, the two companies that are saving the world with their COVID-19 vaccines. Over the next half hour, we will bring you leaders and big thinkers from Boston Mayor Kim Janey and former Mayor, now Labor Secretary Marty Walsh, to Moderna co-founder Noubar Afeyan and Boston Celtics co-owner Steve Pagliuca. We will tell you a story not only about how Boston rescued the world from a pandemic, but is also recovering in a world that will be forever changed. Bloomberg's King Garrigan paints the picture.
The grip of the coronavirus pandemic was crippling in the Bay State from the start. Within months of the state's economy being shut down, unemployment hit a peak of more than 17% in June, the worst in the nation. More than 650,000 Massachusetts residents were without work. Job postings dropped 39%, and small business revenue plummeted 64%. Massachusetts responded quickly with a $774 million economic recovery plan.
To be clear, there's no substitute for the size and scope that a federal aid package could deliver. But that doesn't seem to be in the offing, and we certainly don't believe that we can wait.
Making it one of the largest aid programs in the country.
Without these investments by our government entities, a lot of these small businesses wouldn't have made it.
Massachusetts also prioritized its continued support for innovation in health and biotech, with over 100 life sciences companies working to develop diagnostics, therapeutics, and vaccines, including Cambridge-based Moderna.
Our plan right now is to continue to make as many COVID-19 vaccines as authorized in the UK, US, and Europe.
All this at a time when Boston experienced an unplanned transition of power.
President-elect Joe Biden and Vice President-elect Kamala Harris have nominated me to be Labor Secretary in their administration.
And during a time of unprecedented racial reckoning.
With the launch of All-Inclusive Boston, we will begin to write the next chapter in Boston's safe recovery, reopening, and renewal.
The reopening approach here has been slow and steady, and while the business landscape will be different for years to come, there are recent signs of recovery. Massachusetts unemployment has rebounded to 6.8%, and consumers are shopping again. Spending is up 18% since January.
The companies that made it through the pandemic, they're smarter, they're leaner, and they really know how to serve their customer. And that's what's going to make them prosperous and give them a future on through for decades to come.
Kim Kerrigan, Bloomberg, Boston.
Meantime, it has been a little over a month since Kim Janey made history as the first woman and first Black mayor of Boston. She stepped in after Marty Walsh resigned to become President Biden's labor secretary. Interim Mayor Janey spoke exclusively with Bloomberg Bay State business co-host Joe Shortsleeve about Boston's reopening plans.
We don't want to find ourselves in a situation where we're doing this yo-yo of opening, close, opening, close. So we will continue to be informed by the data, certainly informed by our public health guidance and what our business leaders are saying. First and foremost, we have to continue to ensure that our residents, that our workforce, that our business community is safe and protected. That means getting the vaccine out to more people, meeting people where they are, and continuing to do all of the things that keep us safe, like washing our hands. I certainly encourage people to continue to wear face coverings, making sure that you get tested regularly, and certainly get the vaccine. We have everyone now eligible over the age of 16, and grateful that we have seen an increase in terms of 61% of the folks over that age having at least one dose. We need to make sure that folks are following up and getting the second dose, and that we are protecting ourselves, that we are informed by the data, and we will certainly revisit any dates should we continue on this trend downward.
Mayor, how do you encourage people to come back to the city's downtown office towers? I mean, today Vanguard announced that they're going to have essentially half their workforce work at home a couple of days a week. And others have been following suit in that same vein. I mean, this has impacts on the cafe, the restaurant, the night spot, the dry cleaners, and ultimately the city's tax base. Are you concerned about what all this remote work will do to downtown Boston?
I think one of the things that we have to realize is that there isn't any kind of going back to a normal of how things used to be. But we do have an opportunity to create a better Boston for all of us. The workplace most likely will change, and we are certainly looking forward to more projections of how our companies are going to treat their office space in terms of remote work. I think a lot of folks will be continuing to do some form of remote work. And so that means if there are fewer people coming into downtown, that we have to have other things that attract them downtown. If it isn't work that is bringing them here, we have to make sure that there are other things that attract folks to Boston.
Boston Interim Mayor Kim Janey there with Bloomberg's Joe Shortsleeve. Meantime, former Boston Mayor, now Labor Secretary Marty Walsh, spoke with Bloomberg on the heels of April's surprisingly downbeat jobs report. Secretary Walsh says the U.S. is seeing positive signs in the labor market despite this biggest jobs miss in years due to lingering concerns about the virus. Take a listen.
The leisure economy, which includes restaurants and travel, is up significantly as far as job gain, and more people looked for jobs in the month of April than the previous month. So we're seeing positive signs as we continue to move forward here.
U.S. Labor Secretary Marty Walsh there. Coming up, we heard earlier from Ginkgo Bioworks co-founder and CEO Jason Kelly about his company's plans to go public in one of the biggest SPAC deals yet, just part of the red-hot biotech scene emerging from the Bay State. The biggest listings in 2020, all hailing from the greater Boston region. In fact, 32% of all U.S.-based biopharma IPOs last year were headquartered in Massachusetts. What makes the area such a hotbed for medical and biotech innovation? We'll talk about that next. More from Kelly and Moderna co-founder Dr. Nubar Afeyan. This is Bloomberg. Welcome back to a special edition of Bloomberg Technology, where we're looking at Boston's recovery. Kendall Square is a neighborhood in Cambridge, Massachusetts, right next to Boston. It's an area known for its cluster of tech companies and MIT buildings, and it's also home to about 120 biotech startups, all located within a mile radius. There, too, startups can rub elbows with major biotech and life sciences players like Biogen, Moderna, Novartis, Pfizer. When you follow the money, you see a surge of venture capital in Massachusetts, $5.8 billion pouring into biopharma last year alone. And with the push of technological advancement and the pull of unmet medical needs, the Boston region stands to flourish in this field for decades to come. I caught up with two big players in the community, Ginkgo Bioworks co-founder and CEO Jason Kelly and Dr. Nubar Afeyan, co-founder and chair of Moderna. Here's their take on the Boston ecosystem and why it drives so much innovation.
Definitely the interplay between the academic, the small company, large company, hospital, research institutions, all collaborating with the impact being felt in the hospitals with patients being treated, the amount of clinical trial work that goes on, all of that has attracted a very strong professional service community, whether it's in contract research, contract manufacturing. So it all exists here and it's feeding off of each other. And it really is a privileged place to work out of because all the elements are here and they're being drawn here more and more.
You got obviously Moderna with the mRNA vaccines. You have Thermo Fisher right outside of town that basically made the majority of the PCR tests for the country, right? You have Ginkgo and the MIT Broad Institute working out how to do classroom testing for school reopening now in Massachusetts, Maine, and rolling it out nationwide, right? I mean, what did Silicon Valley do for the last year? Clubhouse or something, you know, right? Like we could all chat, like, I don't know, apparently you could do some like sneaky room with your friends or something, you know, right? Like you know, and I think the reality is Silicon Valley's gotten good at business risk and developing software. Like, is this going to be the next hot thing? That's what the core skill is in Silicon Valley, and developing software quickly. But, you know, doing sort of real tech stuff with technical risk, I think they've gotten a little bit skittish.
You know, when I started, biotech was a little blip next to a gigantic 128 computer industry. And I always used to think that we're going to be this kind of also ran in that field. Unfortunately for Boston, a lot of computing industry moved out to Silicon Valley and populated that. And biotech, interestingly, very much got advanced in that same kind of San Francisco environment because of the amount of risk capital and people who were there. I would say that the kind of the Silicon Valley equivalent in our space is clearly Boston now. And I think we just have to do everything we can to protect it, to grow it, and to have its reach expand to the whole world. That's the other thing that's different nowadays. You know, 50 years, 40 years ago, whatever you did locally stayed locally. Now you have this global reach so that you don't have to be in Boston to be in Boston and to be in the ecosystem of Boston. So all good trends from my point of view.
Everyone's been living biology for the last year,
right? Proteins on the cover of the New York Times, right? My parents know what PCR is all of a sudden. And so there's this moment where there's going to be public awareness, I think, of how integral this technology is in our lives. And I expect that's also going to lead to demand, even in biotech markets outside of pharma.
The capital is coming not just from these specialists who know the lingo and who have incredible patience for this kind of a bit of an esoteric field, to people saying, you know what, biotech is saving lives, as it always has. It's solving billions of lives, hundreds of millions of lives, not just a few lives. And so it's coming to the mainstream conscience, just like the internet did to the software industry, right? Before the internet, the software industry was the purview of highly specialized investors, tech, high tech. And now all of a sudden, everybody has a segment of what they're doing in that. I think biotech is definitely benefiting from that. It's nice to see more and more people drawn into this type of frontier development. You know, it's I guess the Wild East as opposed to the Wild West.
Dr. Nubar Afeyan there with Ginkgo Bioworks CEO Jason Kelly. We heard there, of course, about biotech's potential to save lives in the form of research, in the form of vaccines. And just a couple days ago, Massachusetts announced that more than 4 million people have now received at least one dose of the COVID vaccine. As for healthcare workers, the 514-bed Boston Medical Center estimates 75 to 80% of its staff is now vaccinated. During the first surge a year ago, that hospital treated about 1,400 COVID patients. As of last week, there were just 14 COVID patients at the facility. Then there's the part of the population who put off getting treated at the height of the pandemic. I sat down with Boston Medical Center President and CEO Kate Walsh recently to talk about the status of those patients now and how tech is helping.
We're definitely seeing people come back to see their doctor. We were very heartened by the promise of telehealth early on in the pandemic. We weren't sure it was going to really work for our patients, but we were very gratified that we were able to reach people either by the phone or through through some digital device. And we've invested in or really working to have sort of a hybrid system where people who need to be seen in person can, but if it's more convenient and it's safe and it works for you and for your provider, we're enabling digital approaches to medicine as well and learning along the way. But people should come back to the hospital. It is completely safe, probably one of the safest places you can be because it has a high preponderance of people who are vaccinated and a lot of masks.
And, you know, hospitals were also financially hit hard because people weren't coming in. And I'm curious where things are now. I know federal relief was supposed to help, but how's the balance sheet and did anything have to be cut?
Not yet. I think as you pointed out, because we had a lot of COVID patients and we serve a lot of Medicaid patients, we kind of hit a lot of boxes for federal support. So we were very pleased by both the support that the Commonwealth of Massachusetts gave us and the federal government through the CARES Act. And that really kept us afloat. And some of those funds last until June of this year. So we are counting on those to help us get through this year. As we look out, we're worried about, like everybody is, about what COVID's done to the economy, how many people are working, how many more people will need public assistance. Those are the people who typically get cared for at our hospitals. So we want to make sure we're there to be able to take care of them.
And even in normal times, or whenever we get to new normal, whatever that is, do you see a hybrid mode of medical care continuing for the long term, where some of it will be in person and much more of it will be online?
I don't know if much more of it will be online, but I do think you said it best, a hybrid that we will use the benefits of technology to improve access to care, to improve access to specialty care, to improve, imagine a situation where you go to see your primary care doctor, you and she both have a question that a specialist could answer. Could you do that digitally right on the spot and leave with the answer you need rather than making another appointment? I can see it, a hybrid care morphing or kind of guided hybrid care being a big part of the care going forward.
Boston Medical Center President and CEO there, Kate Walsh. All right, coming up, Bitcoin, blockchain, and basketball. We're talking to Boston's very own Bain Capital co-chair and co-owner of the Celtics, Steve Pagliuca. Next, this is Bloomberg. Sports is has always been an important source of pride as well as an economic engine for the city of Boston. You're going to find no shortage of Red Sox, Bruins, Celtics, or Patriot fans there, of course. Sports franchise recovery comes at a time when more teams are getting into cryptocurrencies. Back in March, the Oakland A's became the first team in Major League Baseball to accept Bitcoin for suite season passes. The Dallas Mavericks were the first NBA team to accept Dogecoin to buy tickets and merchandise. But even as cryptocurrencies like Bitcoin soar, some sports leaders are still skeptical. I asked Bain Capital co-chair and Boston Celtics co-owner Steve Pagliuca where he stands.
It's hard for me to wrap my mind around Bitcoin being a viable currency. I see blockchain as extremely valuable, but Bitcoin's going to have to go a long way to go to be accepted in lots of places, to have convertibility. And people forget when we went off the gold standard, and gold is really almost, I'd call a less efficient Bitcoin, because the value of gold is based on what people think it's worth. The intrinsic value is nowhere near what the price is. So when people criticize Bitcoin, they should criticize gold as well, because gold value is only in the minds of people in the world. Bitcoin's actually a more efficient store of value. You can transfer it, it's dividable. The blockchain technology is fantastic, but I think it has a long way to go. And what I'm worried about is if it goes that far, it starts to be accepted as currency, then governments often react. As people don't remember, when we went off the gold standard, it was illegal. They made it illegal for Americans to own gold. So if Bitcoin really starts to threaten the financial system in the minds of regulators and policymakers, they may say Bitcoin can't be accepted as currency, and then you'll be holding, a lot of electronic Bitcoin that probably can be used as electronic wallpaper. So that's the risk.
And if you're skeptical about Bitcoin, then I wonder how you feel about Dogecoin, even though Elon Musk and Mark Cuban love it.
Yeah, I'm on the other side of Elon, and with all due respect of Elon and Mark on that one. Dogecoin seems like a prescription for disaster for the last person who bought it before the value falls. So obviously it could be a lot of fun to buy $1 or $2 of Dogecoin, but I certainly wouldn't bet my savings on it.
What about NFTs? Are you bullish on NBA Top Shot? Because a lot of people still don't get it.
I'm bullish on NFTs in general. Essentially, as I step back looking at NFTs and being on the NBA NFT committee, NFTs allow folks to have, first of all, ownership, verified ownership, using the blockchain technology in these clips. It's analogous to having baseball cards. Back in the 50s and 60s and 70s, baseball cards, basketball cards, they were the rage. Really, these clips are just digital baseball cards. They don't degrade. You do own them, and people will own those moments forever and can pass them down. So I think NFTs have kind of democratized collecting and allowed people to really buy things that they enjoy. Really no different than baseball cards. It's kind of a modern, day collectible, paintings, baseball cards in a digital form.
And then everyone's talking about what new normal is, or, how much of old normal comes back. Obviously more people are going to be working from home. We're looking at a more hybrid work environment. But what about sports? Is there anything that you've learned or will have taken from the last year? And will that change the way the game is played going forward?
Well, I think we've learned, first of all, that sports is a great unifying force. Even in this pandemic, it's the most watched event. It ties people together, and you've seen the NFL rights deal go up because of that. I think the pandemic really hit home with me in terms of how important those gatherings were. Going and seeing all the fans in the Garden, uniting behind one cause in all the sports. So I think it's proven. It's been a tough year, but it's proven how valuable sports are to the nation, to the psyche, to the world, and we're really glad to be part of that. In terms of the work environment, I think you're going to see changes there. You won't see wholesale changes. But I'd have to say the productivity of let's say in our business, we're look at 4 or 5 businesses every week to invest into. You can now look at 10 or 15 because of the convention of COVID. You don't have to travel to Los Angeles to spend a day with the management team. You can spend half a day, see the presentation, decide whether you want to take a second step or look at it and screen it, and then you can do another one. So it kind of doubles and triples productivity if everybody's on the same page and you decide to do all first meetings regarding investing on the internet. So we've been very productive with Bain Capital. Now it's very isolating for our workers, and we want to get back in the office. But I think there'll be some long-term gains in terms of having a very productive board meeting on it. Let's say on a company, I'm on the board of Axis Bank in India, rather than having a day fly to India, a day board meeting, and a day flying back. I can now do that in the 8 hours of just the time that's allotted. And that obviously is a huge productivity tool. So at the margin, I think you'll see higher productivity, more usage of that for first meetings to see if there's a meeting of the minds, and then people will fly out and visit businesses and visit companies again. So I think it's just a continuing evolution in how communications has knit the world together, knitted the United States together, and continuing to make things more productive and capital flowing more efficiently.
Bain Capital co-chair and co-owner of the Boston Celtics, Steve Pagliuca there. And that does it for this special edition of Bloomberg Technology with a focus on Boston. Thanks for joining us. This is Bloomberg.